Welcome to the Travelex Weekly Outlook for February 28th. The dollar starts the week off down against most of its major rivals. The U.S. currency has been hurt by elevated oil prices near $100 a barrel and by expectations for higher rates out of Europe. So those forces have combined to weaken the dollar, which right now is down at about a 3-month low against our currency basket. It's near a 1-month low against the euro, and it's near its lowest level in 3 years against the Canadian currency. Last week, the dollar also got pushed around. That was by expectations that high oil prices could pose severe consequences for the U.S. economy. For one, high oil prices, that runs the risk of potentially slowing consumer spending, and that is the main driver of the U.S. economy. Of course, with slow consumer spending, that does pose the risk of potentially derailing the U.S. recovery. So that combined to pressure the dollar broadly against most of its major rivals. In fact, the prospect for slower growth out of the U.S. if oil prices remain elevated, that could also extend the low rate outlook for the Federal Reserve. And such an ultra-low outlook with U.S. interest rates near zero does put the dollar at a disadvantage against most of its major rivals. By contrast, we have seen higher oil prices work in the favor of the single currency. That is because higher oil prices, that can increase a trend that we've seen recently out of the Eurozone, and that is a growing threat of inflation. The increased concern about inflation out of Europe, that could actually move up the timetable for an eventual Eurozone interest rate increase, and that would tend to make the single currency more attractive to investors overseas. We have seen interest rate differentials that has really come into play in recent weeks. As a result, that has rewarded currencies such as the euro and the British pound, and that has really come at the expense of the lower yielding U.S. currency. In the week ahead, the dollar will take its cue from Friday's jobs reports. That is going to be the main event for the week, as well as key congressional testimony by Fed Chairman Ben Bernanke. He is due to speak on Capitol Hill on Tuesday and Wednesday, and investors will pay close attention to that. In addition to the Fed Chairman's remarks, this week also features a raft of central bank meetings. We do have one out of the Eurozone. That's going to be on Thursday. The Eurozone Central Bank is widely expected to maintain its 1% interest rate, but in a post-meeting news conference, the ECB bank president, should he play up concerns about inflation in the Eurozone, such a hawkish tone could basically add to expectations for higher interest rates in the Eurozone and come as a key source of support for the single currency. Also this week, central banks in Australia and Canada also meet to take up policy, but neither one is expected to touch interest rates, though by around mid-year we could see a rate hike by the Reserve Bank of Australia and by the Canadian Central Bank. That should do it for this week. For the latest on the dollar, feel free to check us out online. Have a good week.